And we are live. Ask Me Anything, May 8th, 2024. Let's go. Get those questions in the chat box over there. Let's talk infinite banking. Let's talk investing. Let's talk money. Let's talk hockey. Let's talk basketball. Let's talk founding fathers. Let's talk anything except for Vegas team. But be right back in 14 seconds.
So we're ready for questions.
Okay. So 52 years old, has mortgage of $350,000 at 9%, a 30-year mortgage with a new purchase. So it's $3,400 a month. The value is $410, so $350 to $410. So there's some equity in there. Wants to pay off mortgage with IBC or however makes sense. Selling a property and we'll have $170,000 cash from that. Gross income is $48,000. Cash flow is negative due to the mortgage payment. What's the best option for this client situation?
Need more info. I think we need more info.
Negative cash flow. Yeah, what do you need, Brian? So
Jason, what do you need?
How much? Well, how much does this individual earn? How much do they?
48,000 per year.
48. Let me see if I can get it all in there. Sorry, guys.
Gotcha.
Yeah.
Okay.
Okay. 52 years old, has a mortgage of $350,000, 9%, $3,400 a month mortgage. There is some equity in the house.
How did he even get approved to get a loan, whereas payment's more than his income?
So they're an entrepreneur, so that's why the interest is so high. They have a self-employed based loan. That's why the interest is higher. So yeah, it's kind of crazy how they got approved, but they did, and they got approved 3 months ago. So it's a very new situation, which I don't understand how they got it quite yet, but
We might need to flash the disclaimer up. So Stephen, I don't know if you have it, because what I'm about to say might need it.
All right, let her
That was
rip.
funnier in both your dad jokes. Well done.
Well, yeah, the dad jokes probably need a disclaimer as well, but
Where's
Can you
B-Rad?
flash that back? Keep that up there on the bottom so
Yes.
we can all look at that.
yeah. So I guess here's my perspective, and we all do things a little bit differently, but one, I don't like paying off mortgages. Personally, I don't like paying off mortgages because every time I take $1 and you put it into the mortgage, it goes into that box and it's locked up. I can't get back at it unless I refi, do a second lien HELOC or something of that nature. So for me, the tool that I like to use is a first lien HELOC. And Joe and I talk about this all the time. So first lien HELOC is going to give you access to put your money into prepaying the mortgage, but if you need it, you can quickly pull it back out. The other thing between this new mortgage you have, and I'm surprised Chris Noggle is 52 years old. I didn't think he was that old. But so Chris, or whoever this client is, if you were to look at your mortgage statement of that $3,400 a month that you're paying to that mortgage, what is it, 70, 80% maybe is going to interest. So that's the other challenge. And it could be more than that. I have to run a quick calculation, but it's, so you're paying a lot of heavy interest up front. The bankers love it. So that's why you may want to look at a first lien HELOC if that's something that you could do with your situation.
yeah. So the client was looking at infinite banking as a way to pay down the mortgage. But when we walked through the numbers, this is what it came out to be. It's like, well, if you take the 170 and use that to start a policy with a dump in, first off, the gross income is going to limit the amount of dumping you can do. So you can't even get the 170 into a policy. You can only get maybe up to half of it, right? Maybe up to half of it. Then you have a premium payment. You borrow from the policy, pay down a portion of the mortgage. So now you've got mortgage payment, loan repayment on your policy loan, and your premium. And so does that change or help the cash flow situation in this person's life? I don't believe that it does in that scenario. Now, what it could help, though, a little bit is that this loan, this mortgage, by the way, has the ability to do a recalc. So if you pay down principal, they will recalc the payment on your mortgage and reduce it. So paying down the principal in this scenario does reduce the payment.
Okay.
So that does kind of change it a little bit, but it's very hard to make the numbers work with a infinite banking policy, to be honest, because you have
so much more. Than
yeah.
that.
Yeah, no, what the gross income, I mean, just doing a quick calc, it limits them at like $600,000 in coverage, right? I mean, it's 15 times their age.
Yep.
Well,
So,
I mean, we should be able to get him approved for a much bigger policy than that, using gross business income, just like he used to qualify for the mortgage, I believe.
Yeah, because they actually are self-employed. That's where most of their income does come from. They do have W-2 income as well. But one of the scenarios that was going through my head is, well, what would it take to get approved for a first lien HELOC?
Yeah.
Use maybe a portion of the 170 to pay down the mortgage to the point where a first lien would then come into play. Now you have access to that equity in the capital. Now do velocity banking, funneling your money through that. Now you're paying less in interest. You're knocking down the mortgage from 30 years down to 5 to 10 or whatever it ends up being. And you can also then now look at infinite banking as an option. But the question to the client that I put to them, by the way, this is my client. I put back to the client is, well, if your mortgage is done through velocity banking, what's the purpose of infinite banking? What are we now solving? Because if we've solved the mortgage through velocity banking and first lien HELOC, what's infinite banking solving for your life now? They didn't quite know how to answer that. And so as a mentor, this is what we're always asking is, what is infinite banking solving? If we're not solving something, why are you doing infinite banking? Like we got to have a purpose for it, because otherwise you're going to drive a Ferrari to go get milk at the grocery store. That makes no sense. Right. So it's an interesting case.
I just did some math on that example. It really appraised for 410, and he has 60K of equity and 170 in cash. So 410 minus 60 minus 170, 180,000 is what he's going to owe on the loan. And at the one bank Joe uses mainly in Tennessee for first lien HELOCs, that monthly payment, just interest, would be $1,100 a month. And he'd have access to another 100, 200,000 to use to invest somewhere to increase income to pay it down faster.
Correct.
So that would, if he could get approved to do a loan like that, that would make sense.
And they just got approved 3 months ago for this mortgage.
Yeah, so I mean the challenge is going to pay closing costs twice if they make this switch, but I think long term it might be something to look at. And the other piece too is, if you took some of that 170 or even some of the equity down the road, and I don't know if this particular client is into private lending or what their investment strategy is, but with a lot of private lending, we're seeing 12%, 15%. So I mean that can generate some nice cash flow as well to run back into the home payment if you had a first lien HELOC.
Yeah. But the question now is that how does infinite banking help this client, or how does it come into the situation?
well, then once they have cash flow, then they can start a policy and they can build it for legacy. They can build it for purchases. They can build it for just a financing system once they freed up cash flow. I mean, just look at like 9% for 30 years. I mean, what does that come out to amortize? It's got to be in the 20s, right? Like 20 some percent at least.
Oh, it's nuts. It's got to be higher than that, I bet. But yeah, that was where
it's usually like a 3-time multiple when I hear Joe talk about it. So I don't know that. There he is. So he could tell us what's 9% at 30 years, brother. Welcome to the show.
A lot.
That's a 9% 30-year amortized mortgage we're talking about.
Can you put the numbers back up real quick? I just want to type them into calculator.
I think it's closer to $1,300 a month. I was kind of
throwing this
together. 410 times 90% gives you 369. 369 minus the 350 gives you $19,000. 19,000 plus the 70 is 190 minus 1, so that's 189. 189 in cash value to use. So 189 can go into an opportunity out of the HELOC. That would give you
$2,000 a month.
Yeah, a couple $1,000.
180. So if you didn't do that, it would be 180 left in the HELOC times 8.75% equals, divide that by 12, $1,312 per month if you utilize the HELOC with your 170 and put that into the HELOC. So you'd be at 1312 instead of 34. minus 3,400
Now,
equals saves you $2,087 a month. Is that what you
now
come up
34 does include escrow for taxes and insurance.
Yeah, I was going to say, because the mortgage payment on a 350,000 mortgage at 9% is 2816. So the rest of that must be taxes and insurance. But listen to this. This is where it gets crazy. Of that 2,816, 2,625 for the first month is interest. That's 93%.
That's what and that is that they know that they're looking at it. That's where they're like wanting to do something different with what they did. I don't understand why they did this in the first place, but that's beside the point.
Over 30 years, they would pay $663,000 of interest.
Jeez. Yeah,
That was a great question, huh? That's a 20-minute question right there.
yeah.
Okay.
Yeah, and then to add on to it, the other question I got that's similar to this one is, does it make sense to get a HELOC right now with high interest rates or rates to where they are right now?
Yeah, because they're at 20-some percent. I mean, if they get a 9%, even if it's variable, it's still way better than this.
Yep.
Way better.
Yep.
Craig,
So
you came up with how much a month? 28?
2816 for the
All right,
payment.
so they'd be saving $14.88 a month.
It's not a small chunk of payment.
I utilized the 170 to put into the HELOC and calculated that out just because they're in control. So they owe 180 right now. They would owe 180 in the HELOC.
And the other thing to keep in mind with this scenario is right now they have a huge liability and no asset. When they flip it around and do what Joe and what we just talked about, they're going to still have a liability in the HELOC, but they're also going to have an asset in the HELOC as well they can borrow against. So you're completely flipping the tables around from how you would deal with a bank traditionally versus how you do with the HELOC. With the HELOC, you have an asset. Same with infinite banking. You have an asset, right? So you have an asset and a liability. That asset can then go create cash flow. That is where your mind has to really shift, or your way of thinking. Assets and liabilities. If you're going to get a liability, make sure you have a corresponding asset. That's one of the I always drill home to a lot of people, but that's very cool.
Who's in control of the mortgage? Who's in control of the HELOC?
Yep.
How can we put more money in and still have access to it with a HELOC? Why don't you put more money down on your mortgage? Because now you don't have access to it. The bank keeps it.
There you go.
Damn, you guys are amazing. I don't have anything to add to that besides you guys are great. David and Dorothy are saying, hi all. Can our 501c3 open an IBC if I take the lab tests and ECG?
I think you can. I think it could.
I feel like Linus, you might know this because it's like. Have you seen any at 501?
I haven't done any, but I think I've heard Chris talking about it. 501c3 would be like a nonprofit, right?
Yeah.
And so it would have to be justifiable as far as the nonprofit getting a policy on the key person within that organization, I think is how I understand it. And so then it should work, yeah.
And then a follow-up kind of question to that is also, is there a way to place 401k funds into a policy and save on taxes? Can you open an IBC policy using IRA funds?
If you take it out, then you're going to get taxed.
Yeah.
You can't. It's not a lateral move.
Is there any case where a 401k loan might make sense to start a policy with?
But that's only up to $50,000.
Yeah, you're limited on that, and then of course you're going to have that repayment back to the 401k, or you borrow from your policy, pay back the majority of the 401k, and maybe add some cash to pay it back 100%. And now you've got a policy loan. So to do that, it's a longer term kind of strategy because you're essentially funding the dump in up front by borrowing from some other asset to do the dump in. We do have people that do that, yes. Has to make sense to the client though too as well, and understand the cash flow.
Yeah,
David and Dorothy really get this, right? So I know that you would just have to know how much you're looking to take out, like what's the penalty, taxes you're going to pay, what's the implications as far as your taxes overall, and then are you able to take it out and use it to even pay the taxes? Like, does it make more sense to go in the policy? Or just, there's a lot of questions. So it's a lot of, it just depends.
So would the step one be just to kind of add up all those like what the tax would be, what the fees would be, and then get that number and be like, is that worth it? Like then you make the decision off that.
Well, there's a couple so there's the one there's a strategy we were doing with Chris a few weeks ago with the retirement strategy, Craig, that you guys where we were taking the 401k along with the single pay annuity and over time taking money out to allow for the taxes and then getting that money moving. So that's probably what they're talking about. They did say at the bottom there, Chris had mentioned something about it. And since they're at the last experience, maybe that strategy, it's a way over time to take money from a 401k. And then another option I think that they might have been exploring was the long-term. One America has a long-term care product that allows you to pull money from a retirement account like a 401k and put it in over time, take tax deductions that they credit you on the long-term care or pay the taxes, but they credit you back on the long-term care policy side. And so that could be an option too. It's not IBC, but it could be a good option.
Yeah. So in that webinar that Chris did on the volatility buffer and the covered asset, that stuff was gold, because when you think about the 401ks, part of that strategy was to take some of that qualified money and put it into a single premium immediate annuity, and it would be a cash stream that you would have a guaranteed income for the rest of your life. And so that was part of taking some of that money out of the 401k, putting it into that annuity, having that predictable stream of income, and then also building a policy over time that when the 401k, when you're going to be forced to take minimum withdrawals. So at some point you're going to be taking those out anyway. But if you're trying to take out more than that for retirement and living, when the market's down, the idea is you take the cash value from the policy as a volatility buffer, so you're not withdrawing from your 401k when the market's down. So that whole strategy is really cool, using the single premium immediate annuity and the policy. But you can take 401k money and put it into the annuity, so that those would both be qualified tools. And you will pay taxes on that annuity when you get paid on.
Interesting. I did a webinar replay from 2 weeks ago that in the chat that was talking about how you combine those things together. And then Joe, I don't know. So Brent, hi Brent, is saying, yes, 501c3, Joe is working on one for a private school. And then Eve was saying, the human owner first owns the policy and then transfers the policy into the 501c3.
Could do it that way too.
That could also work.
After Jay, I don't have any questions, so get them on in. Jay is saying, hi, everyone. Currently have second lien HELOC. Can't do all in one with a 100,000 balance at 9.75%. Have another 100K available on HELOC. Am I in a position to start a policy? Monthly cash flow is 1,000.
Absolutely.
Yeah.
And with those numbers, that's almost going to be a money tree. 100,000 with a 12,000 a year is almost a money tree in year 2. I'd have to play with it a little bit, but might be year 3, but try year 2.
Now, when they say monthly cash flow, is that their income?
Hopefully, I was kind of, yeah, that's a good point. I'm hoping.
Or is that disposable income?
Leftover.
Disposable.
I thought I read it as leftover.
Yeah. So Jay, is that when you say cash flow, is that your disposable?
And if so, thumbs up, green light.
And Jay's a regular on here too, so it really depends on what Jay's trying to accomplish too. So that'd be a big portion of this.
Absolutely. So I just put in the chat mentors.beyourownbanker.com for anybody who wants to get on the phone to start a policy. And no questions pending right now. So
We'll definitely have time for Shauna's aunt to use her computer at 5:29.
Hilarious.
Anybody else got any stories? Snaggy's fast typer. How fast do you guys think Snaggy types?
We should take one of those typing tests.
Pretty fast.
Yeah, I love those assessments, Shauna. Send me another one.
Do you? Okay, I'll give you one.
Joe, how do you type?
The next mentor we hire is going to give us typing tests now, Shauna.
Not me.
So here's a question for the group. This came up with the client of mine. I want to see what your guys' response is. So a client said they don't really know, they don't know how infinite banking is going to solve their problems today. And this person's 52 years old. They said, I like the idea of not having the banks control my money. They said, but I would love to have it be like a retirement strategy. Like, so if that's the case, they don't have a solution or a problem today, but they want to use it for retirement. What would you say?
Use it today and later. Find some money for it now.
I mean, it's automatic going to be there for retirement. I mean, usually at 60, 70, 80, whatever year you start, you stop putting money in and you just start making money, 40, 50, 60,000 at that point in time. But it's an asset in your 11 to make 200, 300% on your cash on cash. Why wouldn't you utilize it both ways?
Correct. That's what I feel.
Well, I think they just want to put their money somewhere and then have it be available to them later to use, where
as income, yeah.
That is like the old, like that's like the conditioning that we all think, right? When we even think of a traditional retirement account.
Yeah, because the challenge they're having is they're having to flip their mindset around pulling the money out as a loan and then understanding the math and how that makes sense and all that kind of stuff. So what I did with that client is I illustrated the policy up to a certain point, and then we started showing loans coming out to the point where the policy stayed in effect. And so all of a sudden they could visually see it. That's the hard part, is when it comes to retirement and infinite banking, a lot of people, like, they can't see that. They can see the cash value, but they don't understand how to access it, how to pull it out, all that kind of stuff. So I did the illustration with the loans coming out, and then you had to play with the numbers quite a bit to make it work, but it did work. Another client, same thing. They were like saying, hey, I want to just not have to worry about it. I don't want to make any more premiums. I want to be done. So with One America, same thing. They pulled 95% out at age 75, and they were done. And so they looked at that, and they're looking at different illustrations, and they're like, holy crap, they didn't know that was possible. And so, of course, now they want to do that one. So it's hard to visualize it. So
good job for you to getting both of them to see that. I still feel like listening to that there are two people that haven't been around the campfire yet. Like we talk about it all the time. This is caught, it's not taught. So no matter what story you're telling them, even though you found the solution, you're feeling good about it, they're still seeing things from the other paradigm.
Correct.
They're still on the other paradigm. They're still thinking about things before they understand infinite banking, the power of it, and really controlling the money, really having that grow in the environment, and all the things we teach and talk about all the time, right? So like I have someone like that the other day where she's saving $1,000 a month. She started last year. She stopped. Her aunt's doing this. She's a client of the Money Multiplier, right? And so she wants to come back. She's saving $1,000 a month. She has discipline, but she wants to do, she's 37. She wants to do $370 a month. And she has $80-some thousand in debt. And I was like, this isn't solving your problem.
No.
And it like explained to me, like, and she was just like very like, oh, well, and I still ended up help her to move forward because she's like, I want to do this. I'm going to do this. I got to start this. And the hope that I have for her is that she will start seeing it. But at the same time, we know that this is not solving any of her problems. She's only putting a third of the money she's actually saving in here. And I even went through the chart, the T chart, showing like banks versus policy and where do the banks keep their money. So there's a place when people don't get this yet, and it's okay. We just have to be there for them, keep teaching it, keep talking about it, and eventually we hope they catch it, right? So that's what I thought about both of your people, Brian. It brought me back to the woman I talked to earlier that I just shared.
Yeah. I got another one after we have some questions here, but there's another scenario that's really actually kind of cool to help solve a huge problem with some business owners, one of whom has dementia. And so I talked about this, I think I can't remember when. Oh, it was with Steven actually on Monday. And that's a cool one because I think we can really help out the people and the families.
Cassandra just brought up ideas on how to switch the mindset. And so what I was thinking is pretty much since this year, last year I flipped forklifts and that kind of just had like one payout when it was done, right? And so I got to see my money work in these couple of checks. But since the beginning of the year, I've been able to put some of my money into work that's spitting out monthly. And so I get $1,200 passive monthly. You know what I mean? So for your retirement plan, it's how can you my goal is to cover all my overhead, right? So if my overhead's $3,500 and that money is $3,500, everything I make actively from my job is extra. So I think people need to get bit by that bug. And the second you get money that you didn't go to work for, it's like crack. I've never done crack, but like money crack.
That was my next question. So I was going to ask. So,
Well,
I think it's like, at least.
yeah, the mindset thing. I mean, so when it comes to mindset, it's really your subconscious mindset is programmed to think a certain way or act a certain way or repeat certain things. So Cassandra, here's what I'd recommend. When you hear something or something comes up and you have a belief that is in alignment or not in alignment with that, notice what that limiting belief is. Write it down, like literally write down that belief. Hey, they say this and I think it's the opposite. Write down that limiting belief and then ask yourself, where did it come from? Where did that limiting belief come from? And what is the opposite belief that you want to have? And then focus on that different belief. Because what's happening is you're when you hear something that doesn't make sense, your subconscious is programmed to think differently than what you're hearing. And that's really where you got to reprogram your subconscious by focusing on a different outcome or a different belief. That's where I would start.
And the first thing, Cassandra, and thank you, Brian, that was really well said, is just looking like your self-mastery is going to be a direct reflection of your self-awareness. So self-mastery is going to be a direct reflection of your self-awareness. So just like Brian was just describing, just be aware first and start noticing the words, like your words make your world, because that goes all the way back to your beliefs, your thoughts. So when you say something, just notice, like, that was weird. Like, don't judge yourself. That was weird. I wonder why I said that. And then write it down. And then you can go back and think about it later on. Like if you're moving during the day, just like, oh, I said this, or it's too expensive. Like, why did I say that? And just go back and really think, I wonder why I said that. Where did I learn that pattern? And eventually you'll start seeing the patterns. It really starts though with the awareness and congratulations for you to ask the question, because that means you're ready to start learning about this. That's how everyone ends down the rabbit hole here. Like every day someone tells me, hey, this is too good to be true. I'm like, hey, I was there. I went down the rabbit hole a few years ago, and this is all we do now, right?
The great thing, Jason, that you just said right there, because in order to change your mindset, you have to want to change it. Like that's it right there. That's the number. That's probably the first thing. The first step is you have to want to change.
That is the first thing. You have to take ownership of it and understand that you want something different for yourself. That's how you end up here. That's if you're watching this, you've already made that decision. So
another thing too is once it changes, it's that quick. It's a snap of a finger. As soon as it clicks, that's how it was for me. Took 16 months to climb the hill, but then it only took 2 seconds for this. Oh boy!
Actually, so I scrolled up a little bit more too, and she mentioned that she's behind 2 months on a mortgage payment. So about like a $2,600 mortgage payment. I'm behind on a $2,600 monthly mortgage payment by 2 months. And then, she asked how to change your mindset. But I mean, I think we've all been there. You know what I mean? Like my childhood home got foreclosed on, like just because stuff happens in your past doesn't mean that it's not going to work out eventually. So
thank you for sharing that, Shauna. I mean, that's a lot of people that I know that are very wealthy is because they saw something, like Brian said, or Joe said, they made a decision at some point, like, this is not going to be my future. Like the past doesn't predict my future. So they made a different decision. So another thought, Cassandra, would be, it's not so much about, it is about switching the mindset, because whether you're having a good day or a bad day is really just your decision on how you're really viewing the day. Mm-hmm. Like Shauna came in sharing like late to this, late to that, late to later day. And I was listening to the words that like, that was her world for the day. No judgment there, but that was the words for the day. And so you could also look at it like, oh, I had the opportunity to do this, or I get to go to my daughter's thing, or I'm helping my aunt out. There's all these things and gratitude. So the first thing will be looking at your life and writing down 3 things that you saw God's hand in, or you're grateful for, or that were, incredible that day that you feel blessed about. And just whatever your words are for that one thing, start with one thing. Because you can't have you can't carry 2 emotions. Like you can't be mad or in the gap while you're being grateful or in love. So
I love that.
The whole Earl Nightingale, which is, the strangest secret. So that might be something to take a look at. Google the strangest secret. But a lot of these books that talk about the mindset, at the end of the day, you need to come up with, where are you trying to go? What are you trying to accomplish? and then just start making actions and plans towards doing that, because I can't imagine if you're behind on the mortgage, there's probably a lot of stress and worry, and that's just what consumes your mind and focuses on it. But for me, a lot of times it's just a matter of, I know everyone's mind's not like the way I work, but I need to see the numbers. I need to see how is the money coming in? Where's it going? Am I spending 50% of my income on going out to eat and convenience type things that maybe I could pull back? So I think sometimes just kind of knowing where you want to go, taking that inventory, putting a plan together, and then just like a tank rolling through war, get on top of that tank, start chewing bubble gum and go after it and just get it done. Because there's going to be a lot of people telling you can't do it or that's not going to work, but you just got to stay focused with it. But got to get your plan in place first.
Before I got married, I was still on the railroad. I got laid off for 6 months. That's when the house burnt down, my townhouse burnt down. I had a tenant lose everything. Still had to cover the association fee and the taxes. I had my duplex. We were living on one side. The tenant was paying me on the other side. Couldn't sell Katina's house. Didn't rent that out, so I was still paying that. I managed to steal from the right pocket to pay for the left pocket, used the tenant, waited for something else. I did stuff on the side. I made it work. Till to this day, if you ask her, she says, I have no clue how he did it. I don't know how he did it, but we were never late with a bill. We always made it happen, and that was the universe. And now I don't have to worry about that anymore. It's all mindset.
Mic drop, Joe. Love it. And then WK369 says, "Sup, y'all? Just got my first policy. Can't wait for another."
Awesome.
Look at that guy's photo. Look at his photo. He was the guy in our video Stephen played in the beginning of that.
Oh, wow.
Love it. May sell a house with my existing loan safely and legal. I heard of subject to existing mortgage.
Yeah, it's called subject to existing mortgage, or sub 2. So yes, you can sell your home with existing mortgage in place. It's called a mortgage or mortgage wrap, or sub 2. It's actually listed on the, what's the form on the mortgages? It's the one on the front of the documents.
Like the contract. I know what you mean.
It's just that real estate document. Anyways, that subject to is an option on that in most of those forms. So
the assignment thing, that like one page.
Yeah, the summary page. But yeah, you can do that. And investors will take your home, or you can sell it to a home buyer, by the way, with that in place. And it actually opens up the doors to more buyers because they don't have to qualify for the mortgage. And so you just got to find an attorney that knows how to draft up that document, the subject to document, and it can work. I've done lots of those in real estate.
So Brian, I haven't had personal experience with this, but when you do subject to, aren't there due on sale clauses where the mortgage company, if they find out, they could call the loan due?
Yep. It's called a due on sale clause. So what you do is you notify the mortgage company that you're doing it before you do it. So
Just to see if they're going to call the loan or not.
Correct. So the person I learned subject to from, they had done thousands and thousands of subject to properties, and the due on sale clause got Pace Morby, he does it as well. The due on sale clause got enacted one time. One time, and it didn't even go through. And so when I was doing them, I would notify the bank, and the bank actually, I think it was Bank of America, sent me an assignment agreement. It has nothing to do with what we were doing. And I even called up the banks and told them, and they're like, "Oh, they don't really even understand." So the due on sale clause, by the way, is if the title does transfer, then the due on sale clause in the mortgage allows the mortgage company to call the loan due. But if the loan company or mortgage company is still getting their payments, still getting the mortgage paid, what do they care? Because they're still collateralized they're still in first lien position. They're still the first position on the insurance, the home insurance policy. So they're actually covered. And then
I think where it became a big problem, Brian, is when rates were low, rates go up, and people are doing subject to loans, and the banks are like, "Hey, I don't want to, have them at a 2% loan rate when I can get them up at 8 or 9." So they would call the loan due, force a refi.
Correct. And that was back in the 80s is when the rates changed. Subject to was a huge thing, and due on sale clause didn't exist. And so then they put it into the agreements. But I've only heard of it being called twice when I was doing when I was in the W-2 world. So yeah, you just never know. But it is something you got to be aware of, but there are ways around it.
Last question, at least for right now. So Jay, we had this question earlier. Second lien HELOC, can't do all in one, 100K balance at 9.75. He does have the 1,000 a month is cash flow, but having a max HELOC balance of 200K at 9.75 is a bit scary. And where would I pull the additional annual premiums from? So one, if the additional annual premiums would just probably come from your cash flow. If they built it where it's $1,000 a month, so long as your cash flow continues that way.
He's missing that we're going to take that 100,000, put it into an investment to have that work for him. He missed that key part.
Yeah, so 200K would be increasing your cash flow.
And the $1,000 that you're running through, you're only leaving in 200 to 300 out of that 1,000. So you still have access to that per month.
And for Jay, like I understand where you're coming from, right? Like I would see, okay, you're putting 1,000, all your additional free cash flows going in your policy. You're overfunding it by a lot, right? By over about 10x overfunding it. So you're turning it into a cash tree. Like all of the stuff Joe's saying is true, but it's a matter of putting yourself in that place that you know that you're going to be okay. It's going to work out and you can trust that that is how it's going to happen. But again, if you're not there yet, you can still start a policy. It would just be we would want to have a plan for you. Like, what are you using it for? If you're putting in $12,000 a year, if you have access to $8,400 in year one, like what is that being used for in your life? And then you start learning from there. You could even take part of it and do an investment somewhere else, right? Without it going through the policy first too. I mean, there's a lot of different ways you could look at it depending on where you're at on the mental side of things, the mindset side of things. Like Joe wants to go full bore. He'll solve the problem. He's 100% right. And at the same time, it's a different comfort level if you haven't done investments and you don't know it yet and you're learning it at the same time. So it goes back to kind of where your mind is with all of it. So
I just saw the numbers and put it all together. And the next years, you're putting in the 12 and taking out 13. So subsequent annual years are already kind of covered because you're just running it through.
Yep.
People have to understand it's not a bill. It's a deposit. Don't worry about what you're running through. Think about what you have to leave in.
There's that, and you have the and Joe, you have the flexibility. So like if he's doing 1,000 a month, if we're doing it where you have, well, it depends. If you're doing the dump in, you have to have more to the base. But if you're not, then you have 30%. That's $300 plus another 10, right? So $310 a month would be your minimum, Jay. So you have flexibility built into the whole system too, if something changes cash flow wise. And that's a big question for people all the time is if my cash flow changes, like how do I know 3, 4, 5 years? Because how many people are really planning long-term or thinking long-term, right? In the country we live in, it's very much consumer. I want it now. There's no patience, no discipline. We want everything right now. And so the part that we really love is that there's flexibility with your premium deposits, how you make them, when you make them. Like you want to do them annually. Like if you had the money coming back from an investment, Jay, you could put it in annually and then you're done for the year. And like Joe said, you get to year 2, if you overfund it that much, then it's going in, it's coming right back out and you're going to have extra. So
I was going to say, you're going to spend that $1,000 anyway. So it's not a bill. Just pay yourself first.
Yes.
It's that simple.
I don't know why, but this was funny to me. Mark said
You're awesome, Mark. You just want me and Zach to go at it again. Because it was all about him. It was all about Mark. Me and Zach were going at it, saying that Mark, he's just, yeah. He's just that was a good time.
Right. So Cassandra is saying, I need to talk to someone to take a look at how to strategize better. And to that point, I want to bring up, I put a video in the chat. So it's using, I think it's like 2 hours long, but it's using the infinite banking concept to pay off debt, buy cars, and plan for retirement. I would suggest watching that. And then whenever you've watched like a handful of what it is that we're trying to help you with, then I would say a perfect next step from there is to book a call with our team. You can do that at mentors.beyourownbanker.com. And then anything else, my friends?
No, I think we were talking about with Cassandra too. I love like educate yourself more, learn more about what infinite banking is. And it's not just infinite banking. You really want to get a full picture, like weigh in. Like get a financial weigh-in, get a level set. Like you said, you're behind a couple of months in the mortgage. And when you're talking about that, Craig addressed it, like that's going to most likely feel stressful. So where is there financial leakage? Where can you bring more cash flow back? Is there, are you overpaying for things? Do you have too many subscriptions? Do you have Hulu and Amazon and this and that? Can you maybe downsize some of those things? Can you change some of the existing things you have? Can you find some financial leakage? And it really starts with you weighing in. Because what we're going to tell you is the same thing. It's just going to be someone telling you like, hey, here's a spreadsheet. You can fill things out. But you can do a lot of that on your own by starting to write down how much you're spending. Are you overpaying on the minimums? Like, where is there leakage? That's going to be the first place that you want to address. So
like somebody who says, I live paycheck to paycheck. Do you have a car loan? Yes, I have a car loan. 360, but I pay 500. Okay, there's 140. Do you have a credit card? Yeah, I have a credit card, 3 of them. This minimum payment's 50, but I put 100 there. This one's 100, but I put 200 there. Well, now you just got $340 to run through a policy.
Or just to start paying yourself first. Like for that person, I want them to put that till they have their monthly bills paid. And then they start addressing some of that debt. And then they start working towards a policy. Right? Because first you have to have because otherwise they're going to start, something's going to happen. They're going to go back to their old habits and it's not going to move forward. It's really switching that mindset first.
Squeeze the bills out to find the minimum.
I'm like super big on your subconscious though too. And I feel like you're never going to hear about infinite banking once and understand it. You have to hear about it like 100 times. And I actually was emailing earlier today. This will be the last thing I say before I hop off, but I was on What the F earlier with Steven, and I made mention that this morning, like me, Lori, Tess, Julie, and Hannah Kessler, we all got on a Zoom this morning and read Proverbs 8 or whatever. But it's like, can you imagine if you only heard God's word once? Like, you have to hear God's word all the time. So you have to come back and learn this stuff about infinite banking, come to all of our shows, and I don't know, just don't put that on your human capability of I just have to figure out a plan and whatever. Like, the plan will show, and next year something new is going to show up for you, and the year after that something else is going to show up for you.
That's really well said. Thank you for sharing that, Sean. And Carson, you are blowing up on social media. Patty and I talk all the time how impressed we are with you. Like, 21, how is that man 21? Carson's gonna be president of the United States. Let's start that right now. Let's get that going. So
appreciate it. And thanks, James, for reaching out too.
We are at the end of another Ask Me Anything. Yes, we are, Stephen Snaggy.
That's right, baby. That's right.
So take us home, big guy. Take
us home. Country roads. I don't know. Go Florida Panthers, and it's a wrap, baby.
So it's another year. We got teams in the finals or almost in the finals that don't even have snow in their states. Is that what's happening again?
Yep.
That is right, man. That is so right.
Weird. So weird.
Yeah.
All right. Well, stay around the campfire. We've got tons of answers. This will be reposted in a few days. Come learn with us every week. Post your questions beforehand, bring them to the show. If you don't, we'll find something to talk about anyhow. So until next week, we will all see you again. Glad you're all here. Remember, if you're enjoying the content here, go ahead and smash the like button, subscribe if you're new, and ring the bell to be alerted for new content. Watch the next video right here that's going to help you on your infinite banking journey, and I'll see you soon.